Welcome back to another episode of Xenith Trading, and this is the video that all of you have been waiting for, and it's the video that I've personally been waiting to record. This is the last conclusive video of my entire Tales of Euphoria series, Judgment Day. You might notice my robe. For those of you who have been trading with me for a while, you guys know that there has only been one other time that I've worn this in a video, and I only do this for good vibes, good fortune, good luck, and this is the right time and the right place to wear this again. So shout out to Jay. I don't know if you still watch my videos, but thank you again for gifting this to me a couple years ago. Now, the entirety of the past 4 to 5 months, we have nailed to a T. There have been people who challenged me. There have been people who doubted me. I didn't give a fuck, honestly. And that's the truth. I don't stray from my analysis. I don't change anything unless the market tells me to. So what we're going to do today is actually cover everything that happened from Apophenia, the last video that I provided, and also discuss how we executed the entire range, getting into puts, top ticking it, and selling it at the bottom, right into our targets. I'll be with you in just a second. All right, now what you'll see is the charts with some timestamps as well as the original squiggly projection that I provided you back in January. If you like the value that I provide on YouTube, please like, subscribe, share these videos, and subscribe to my channel. As well as on the side of me, you'll see a QR code if you want to find out any other information about Xenith Trading or myself. You can look at those links. I'll be honest, I don't really care if you join my community or not. I actually care more about the value that I can bring you on YouTube and Twitter for free, rather than just having you sign up for my community. I could care less if you're in there or not. The other nuance about that is I'm not looking for people who are waiting to be spoon-fed. If you have the ambition, if this is a type of career that you see yourself doing for the rest of your life, if you have the grit, the work ethic, I welcome you into the group. However, if you don't, and you don't have that eagerness to learn, and you're just waiting for the next trade or waiting for the next handout, probably not the best place for you. I would rather you find your place elsewhere. Going back to this entire Tales of Euphoria series and how we traded this range is definitely my magnum opus within my entire trading career. And I've made some significantly phenomenal calls throughout my career. But the amount of focus that I've put into this range and the amount of accuracy and prescience within this range, it can't be compared to any of the other work that I've provided throughout my career. The entirety of this chart that you're seeing right now actually started in November. This wasn't an assessment that just started on a random day. The entire conviction that was built and how all the pieces of the puzzle came together was actually started in November during the week of Thanksgiving. Now, you guys may remember during the week of Thanksgiving, I actually called top on NVIDIA. And I said that NVIDIA would not close above 140.76 in November or December. We are now 4 months in from that call, and we still have not seen a single close above 140.76. This is when I called it in November, December, January, February, and we are now in March. The last time I called top was right before I wrote my 2022 bear market Substack. And funny enough, when I called top, it was also on a semiconductor, on AMD. And this time around, it was on NVIDIA. I have worked effortlessly day in and day out in regards to observing price action, looking at futures day and night, ever since the week of Thanksgiving. Because I saw a lot of red flags that were already starting to build during that week, which is eventually what led me to calling a Euphoria top in the first week of December. During Thanksgiving Eve, I actually spent all night watching NQ until about 2 a.m. And I won't forget that night because it just kept ripping that night. And I knew there was something off about that. And I knew that a lot of the pumps that we were seeing were pretty artificial. But I was curious to see of what market would do while Wall Street is off. And ever since then, I've been observing price action like a hawk, which is what allowed me to be able to call a Euphoria top in early December. And we were able to capture the entirety of that move leading into FOMC. Now, based on that, I was then able to provide you with a projection early in January. Now, this entire squiggly line that you see here, I'll post some screenshots with timestamps throughout the video as you guys can match. This squiggly projection took me 5 minutes to draw. 5 minutes on a random weeknight when we were discussing potential possibilities of what we can expect with SPX. Now, the ability to do this has nothing to do with luck or magic. This is a culmination of years and tens of thousands of hours of screen time that I've spent over the course of a decade to get a better grasp of price action and TA. It eventually becomes muscle memory. So when I'm able to come up with a projection like this, it's because of all the knowledge that I have already, and I take into account the psychology of the markets. What happened that night was that I drew up a projection, not just based on price and time, with the added essence of human psychology. If this were to happen, this would be the pain trade and how the market would trade that would destroy everyone. And again, you can see in the Annihilation video, that's exactly what happened. There's a reason why it was called Annihilation. At every single point in time with these squigglies, there are certain human emotions that are being felt as we trade at these pivots. The squiggly projection isn't always going to be perfect. I never expect it to. But the general path of it and the timing of it, I always expect to be extremely accurate. Going back to this and referring back to the Apophenia video, I discussed the importance of time and price. And if you guys have seen in the Discord now, I have a new category in the advanced courses where I show you examples of how we use time and price in our trades. So you've seen many examples of that when we trade SPX during intraday lately. I will tell you, this needs to break out within the next 10 to 15 minutes or I'm out. Lo and behold, we get the breakout exactly within that window. So when you take into account the squiggly projection that I drew, you need to understand that my squigglies are not drawn in randomness. And I have been doing projections like this for a long time now. If you've been with me long enough, you know exactly what I'm talking about. I've been doing this for years. They're never random. They are always based on what I project to the exact price and time. So when you initially saw me draw this projection out, you'll notice that I had drawn straight up and then straight down, and then straight up, a little consolidation, straight up, a little consolidation, straight up, and then down. And you'll even see on the downside, I was expecting bloodshed. Look at the angle of the squigglies I drew, just straight down. There's no stopping in between. This is exactly what I expected in terms of time, in relevance to price. Now, what you'll also see is at the peak, I was expecting this all-time high to hit sometime within the first or second week of February, before OPEX. And we discussed this in the Apophenia video. What's important to note here is that the deviation from this projection was the contraction and the range that took way longer than I expected to play out, which is this range that I'm referring to here. From the end of January all the way into early February. This range took much longer than I originally expected to break out from. And by the time it broke out, it was already the week of OPEX, which was my deadline. Now, in the last video, you'll remember that I discussed that the clock is ticking. And based on that, there was a chance that we weren't going to see my targets, which is essentially up here. Just going to draw a little zone roughly there. Okay. And it wasn't going to hit my targets by OPEX. So the initial plan was to enter put swings on Friday of OPEX. But due to the fact that the clock was running out extremely fast and we were on a time crunch, I decided to get into those puts just a few days before. And the intent was to add and scale into those puts as we see those higher targets and then fully scale in by then. The unfortunate part was that the market started pulling back the day after. So we never really got the chance to scale in more, which also led us to holding the positions longer without trimming them for a while. Now, again, if you take a look at the original projection that I provided, you'll see at each point where I draw a pivot and reversal matches up exactly with what I would expect with market participants during this time. So the initial thesis was that we would see a new high into 6061 again for a retest. As you guys know, this is a major pivot in the very first Tales of Euphoria video, which would trap everyone into thinking that we're going to new all-time highs, just to dump everything on them. And we would see a brand new fresh low from this range, which I also gave you exact bottom targets to watch out for, which was 58.0550 and 57.8394. We took SPX calls at these lows and we swung it. We were prepared for this. The break of this range, seeing 58.05 and 57.83, is the exact type of move that would cause everyone to think that the bull market is over and they're going to short it, just for it to rip in their face once again. So again, look at the text labels I have here. Let's go. We're going all-time high. What the fuck? Okay, bull market over. I'm shorting the whole. What the fuck? Don't believe this. And at this point, no one is buying. This is the whole point of the don't believe this range. It's disbelief. No one is going to buy that because they don't think it can see higher. And again, people who doubted this or doubted my projection were doing the same thing. We were just focused on buying calls this whole time. And granted, throughout this time, we are seeing tariff tape bombs. And I'm going to dive into more about headlines and data a little bit later. But during this time, we're seeing the same pattern over and over again. And I had discussed, while we were trading in this range, that the patterns will no longer follow. So the pattern was basically every Friday we dump and close red. We did that consecutively for 3 weeks. What changed was when we closed with a bearish engulfing on February 7th. And I believe this was also discussed in the Apophenia video. That's what gave me confidence that the pattern now stops and we will rip to a new all-time high. And from there, it led us to a fresh new all-time high. And it rejected right at our 61.41 level that we had in the weekly plan. Now, again, the expectation was to see higher, but we didn't. So due to the time crunch and the fact that we were already trading during OPEX week, I needed to get into these puts earlier than I wanted to. Again, this is going back to the entire idea of price and time. Time is more important than price. So the way that I drew this squiggly projection was all relevant to the exact time. Notice when I was expecting a top to be put in. Notice when I was expecting the dump to start. Notice when I was expecting the bottom to be formed, right in mid-March. We're literally a week before that. These squiggly projections are never drawn at random. They are always drawn based on what I expect with time and price. So we essentially top ticked swing puts that Tuesday of OPEX week, and we held the entire way down into our target. We sold 30 points before my 5669 hit on SPX, but at the same time, at that point, you weren't really going to get that much out of the contracts anymore. Now, some key points about the entire swing, which we could have done differently to capitalize more. One is going a little further out of the money, or my plan, as you guys know, was that we were going to scale in by taking more out of the money contracts as a way to average up, per se. We never got the chance to do that due to how fast the moves were already occurring and we were breaking all of our levels. It's fine. We captured 435 points of drawdown on SPX, and honestly, only getting 300 to 400% on the put swings really doesn't seem like much when you really think about it. But that's only because we got closer to the money. QQQ, we bought 520 puts, and SPY, we bought 600 puts. I mean, we're deep in the money. QQQ is 35 points in the money, and SPY is 30 points in the money by the time we took profit. That's the only thing I would have changed about getting into these swings. Thursday night this week, I had mentioned to you that a bottom is likely coming soon, or it's already starting to form. And there is a possibility that we won't see my target of 5669. So I was already planning, and this was also posted on X, that I would likely get out of my swing puts by yesterday, Friday. Lo and behold, we saw bottom the next day, right into our 5669 target. I gave you guys specific angles of how I am coming up with this thesis that a bottom is in, using sentiment and VIX. And of course, the target of the sequence that I already had in mind months ago. From the angle of VIX, 2592 is a pivotal level. All of these pivots that I have on VIX represent an inflection point in how the market will trade. With 2592, it is extremely rare that we hold above this level without either going into a bear market or a black swan event. You are free to backtest this yourself, looking at the history of VIX, but this is my level. The same way that 1608 is a risk on level, which is why you see this labeled look ma no hands, is the same way 2592 is essentially a trigger for a sustained bear market or any type of black swan event. And I gave this to you guys on Thursday night, which was right about here. We saw another rejection on Friday, which then ended up marking bottom on SPX for the day, and likely for the short term. Now, the other angle I gave you guys was sentiment. In terms of sentiment, I'm not going to dive deep into this because I'm going to be honest, I would be calling out some major influencers on FinTwit, and I don't really care to do that. But here are my thoughts. I use FinTwit for observation. I don't really care what people are doing. I don't care what anyone else says. The only thing I care about is my own analysis based on what the chart is telling me. Whatever anyone else says is just noise to me. And whatever anyone else does on FinTwit, I don't really care. So what I've noticed, especially within the past week, is a cesspool on FinTwit of negativity, more so than I've seen in a while. This was part of the reason why I use sentiment as an angle, and it didn't occur to me until that night when I started seeing more tweets and posts. For those in the community, you guys know who I'm talking about. In my career, the amount of negativity that appears in social media when it comes to the trading industry typically marks a major bottom. I have never seen more negativity on FinTwit probably since at least like 2 to 3 years ago. And this was a pretty alarming signal to me that a bottom is likely going to be in. When we're in bull markets and we're at the peak of a bull market, you don't see this type of stuff on social media, which is why I love using FinTwit as a gauge of sentiment. This only happens either in bear markets or when we're marking a major bottom. Okay, and there are certain events that occurred over the past couple of weeks that also help provide confluence to this. So that was an angle that I've given you from sentiment and VIX, plus finding confluence with that 5669 target, which was the target for this entire sequence, and the target that I've been giving you guys since pretty much October. Now, going back to this, the relevance of time and price. Since we didn't see this new all-time high within the expected time window, we ended up getting into those puts earlier. We were able to capitalize on the entire downside move. And same day yesterday, the moment we started seeing 5669 was the moment we got into 5800 calls and held for over 200%. And we also took SPY calls to swing for next week. This is all according to plan, guys. I emphasize this all the time. Plan the trade, trade the plan. And I have never once deviated from my plan. A 5-minute projection on a random weeknight turned into a 2-month range that we nailed at every single angle and every single pivot to a T. I have never strayed from my analysis, no matter how many questions I get about potential scenarios, no matter what other people are saying. This is what I stick to, and this is what I've always done with my work, which is why we have such high conviction and high accuracy in our trades. Now, the other aspect in regards to VIX is the vol. I don't expect vol to stay this elevated for this long. Look, we still have a couple of risk events for the rest of the month. We have CPI, PPI next week, and we have FOMC the week after. I don't expect it to stay elevated this long. SPX has been trading at 45 to 50% IV for the past couple of weeks, and it's honestly, I'm tired of it. It's still tradable, but paying $8 a contract for 50 points out of the money doesn't make any sense. For the next couple of weeks, I would want the volatility to cool off. And granted, I have been really enjoying trading NQ in this volatility because it's extremely rare that you get 50 to 100 point moves within seconds on NQ once the volatility goes away. So although it's a little more detrimental when it comes to options, it's great for NQ. Now, the other aspect of this is that throughout this time, I also mentioned that you'll start to see puts decay over time, which is also going to help you find a potential bottom for reversion trades. Even with our swing puts, you were already noticing some decay in the puts as we were seeing near the bottom. And of course, the risk reward just doesn't favor any more shorts. If you're still trying to short down here, you are absolutely insane, because not only are you losing risk to reward on the underlying price, you are also buying the highs on options in terms of volatility, in terms of VIX. So you're not only paying the double or triple of what your premium should cost, you're also shorting the lows on underlying price. All of this comes in play when I find confidence in nailing this bottom. So once the Ivy cools down, I expect things to return to normal. But we're going to get another bounce, and I expect one last flush in April before we see higher into Q2, Q3. Now, the video is titled Judgment Day due to the fact that, hey, that day we got into those puts during OPEX week was Judgment Day. And we've now seen this entire scenario play out, and we've nailed it down exactly how we expected to. So with my weekly plans, it's pretty simple. I provide you guys with weekly pivots, which will provide you directional buys for the week. This week, the upside pivot was 21.05150. I'm just going to add this here. Weekly upside pivot. Here is Monday. And I provided you guys a very simplified view of how to utilize the plan. Number one, which is we hold above 21.051, we're going to squeeze. If we don't, it is simply a bearish retest. So what happened on Monday open? Well, we saw 109 and 21.05150. We rejected. That set the tone for the entire week. We dumped 1,300 points since Monday on this rejection. Very, very simple plan. On that note, I have also been providing you a new formatting intraday, which provides you certain long and short areas that have been working extremely well. And honestly, a lot of the areas that I give you guys are bottom ticks and top ticks on the market in intraday. NQ bottom ticked right at our 19766 level from playbook version 2.0 on Friday, which also provided more confluence on this move. Now, going back to the tariff tape bombs, here's the reality of things. Headlines don't mean anything to me. Data doesn't mean anything to me. My assessment of tariffs is this. Look, long term, yes, tariffs are going to have a major impact on the economy and the markets, okay? You are likely to see inflation tick up. I feel it's almost inevitable. But that's besides the point. When it comes to headlines and data and trading, isn't it funny that the headlines always seem to come out at one of my key levels? So for example, the Friday dump that we saw on February 7th came right at my 60.99.97 level on SPX. I don't care about data when I trade. I don't care about headlines. You'll remember when I took longs on PCE based on the fact that I expected that bear flag to fake out. I don't care about data. I trade data releases all the time. I trade CPI, I trade NFP, I trade PCE. Not once do I ever look at the data. All I do is focus on the chart. The chart will tell you everything you need to know before any headline hits. So 60.99, for example, is a major resistance. We dumped and rejected right off that level. And just so happens we get another tariff headline. Now, here's the other thing. I say this all the time. This is a game in which we don't make the rules. Trump wants the market lower. That's my assessment of things. You can do whatever you want with that information. And if you take a note of the timing of certain headlines that have come out regarding tariffs, I have to look back. But think about the time where he announced tariffs and ETH dumped heavily. And all of a sudden, less than 24 hours later, Eric Trump says to buy the dip on ETH. Guys, this is not a coincidence. And the more you think about the charts and trading from the perspective of a market maker or an institution, the more you will have an edge in trading price action. Because I am telling you, this is not a game that favors retail traders. It never has been. If it was, it would be so easy. There's a reason why you don't listen to Wall Street analysts and CNBC. There's a reason why you don't listen to Jim Cramer. This is not a game in which you follow the suits and expect to win over time. It's not, which is why this entire Tales of Euphoria series is so relevant to what I just discussed. The way we use the psychological aspects of the market participants to figure out pain points and pivot points within this entire projection is what led us to this point today. This is everything that I wanted to discuss. I have put in countless hours, day and night, for the past few months. I have never spent more time on the screens trading until 4 p.m. in the past like 3 years than I have within the past 6 months. I'm pretty impressed with everything, even at myself. I'm proud of everything as well. Not only did we absolutely nail a 3-month long projection, we executed every single part of it down to a T. It wasn't just calling things out in hindsight. We literally executed this entire range. I have been so focused on everything here. I've been subconsciously motivated, I think, since October last year for a few reasons. One is due to people constantly challenging me and doubting me, and I think that fuels me. It's always fueled me. People did the same thing in 2021. Look at how far we've come since. I came back hard in 2021 and left everyone speechless. So the same thing. People kept challenging me in October and December when I am very clear about my analysis and I don't stray away from it. And it just fuels me even more to focus and prove them wrong, like I have time and time again. Not only that, I'm motivated by some of the messages that I received in October. It's amazing to see where my career has brought me when there are much larger players who are looking at my work. Much larger players that I won't publicly mention here in this video, but it's pretty amazing to see everything play out over all these years. And look, my community is still here. Do you know how many communities I've seen since I started this one? About 90% of them no longer exist. There's a reason why we're still here. And honestly, probably stronger and better than ever. This will be the last video of the Tales of Euphoria series. Again, if you haven't seen any of them, you need to go back and watch all of them in chronological order. You will see the entire thing play out. All the pieces of the puzzle will come together. This is truly a work of art in my career. In terms of forward-looking analysis, I'm not going to provide anything to you guys as of right now. Some of you may be asking, well, what are your expectations? I have discussed this in full detail in my Max Payne video, so if you haven't watched that, I suggest you go back and watch that video, in which I discuss when I expect a secular bear market and the pain that would come from it. There's a reason why that video is titled Max Payne. I don't expect that to come until either later this year or sometime next year, and it's going to be about a decade long of pain, in which I define as trading within a relatively large 50% range on SPX over the course of a decade. We haven't had a sustained bear market since the GFC crisis. When you take a look at the bull market that we've had, this bull market didn't start with COVID. This bull market didn't start with 2022. This bull market started during Obama. And we have been running with it for 16 years now or so. So again, I would recommend you look back at my Max Payne video. I pretty much give you my entire assessment in that video. We'll see this entire thing develop over time, and your next generational dip buy opportunities will come within the next few years, in my opinion. Look, I made it a goal of 2025 to be a lot more active, especially on Twitter, since I rarely ever post stuff on there, and I've been extremely active providing live updates on this entire projection every single leg, and it's been exhausting. So I like to take a break. What's extremely obvious is, look, I gave you guys a bottom target on SPX, which is 56.69. We popped 100 points from it on Friday. I'm going to say bottom is in for now, and I'm going to trade it as I expected. But in terms of another projection like this or any other further live updates, I need a break. I'm exhausted. And when the time comes and I feel it, I will provide you guys with another sequence. But for now, this is the end of Tales of Euphoria. And I appreciate everyone who has watched all the videos and liked and subscribed and supported in that regard. This is Judgment Day, and we saw it. So thank you guys for joining in, and I'll see you guys on the next one.